Hello, my name is Michael Devereux. I'm a professor in the Saïd Business School, and I'm also a director of one of the research centres in the school, the Centre for Business Taxation. And this short video is going to introduce you to some of the interesting ideas that we think about when we're thinking about business taxation. And it's going to draw on the analysis that you've already done of looking at the effects of tax on sales, in that case on sugary drinks. So what do we do in that example? We said there's a tax on the fizzy drink which has to be remitted to the tax authority by the supplier. That moves the supply curve, but because it moves the supply curve, the price changes. So the effect is that both the consumer and the supplier will bear some of the burden of that tax. Now that's a key distinction which applies much more generally than just taxes on sales or taxes on sugary drinks. We have two notions of incidence in the tax. The first is known as the formal incidence. The formal incidence falls on the legal person that is required to hand over that money to the tax authority. In the case of the sugary drink, that's the supplier. But the effective incidence of the tax asks the question, who is it that's worse off as a result of that tax being levied? And in that case, in normal circumstances, we'd expect that to fall partly on the supplier and partly on the consumer. And a fundamental principle of economics really is that the effective instance is completely independent of the formal instance. By looking at the formal instance, you can say nothing about what the effective instance is. Now, I'd like to apply that analysis and that principle in the context of a business tax. In fact, the first question is, what is a business tax? And let's start with a question which says, is it fair? Should business pay their fair share of tax? Now, when I ask that question, I usually get one of two answers. Either, yes, of course, businesses should pay their fair share of tax. Or second, well, it all depends what you mean by fair. Now, I'm going to analyse that in the context of a number of taxes which we might think fall on business. And to begin with, I'm going to put up a slide with two propositions on it. Business pays virtually all taxes. Business pays no taxes. Maybe you'd like to pause the video for a moment to think about which of those you think might be true. Well, you've either paused or haven't, but let's move on. We're going to look at a specific example of this, courtesy of PwC. So PwC have created something called the total tax contribution. What they do is each year they go to the 100 Group in the UK. These are effectively the finance directors of the 100 largest companies in the UK who form the 100 Group. And they ask those finance directors, tell me about all the taxes that you've paid in the UK in the last year. PwC then take that, they analyse the data, and one thing they do is they add it all up and they come to a very large number of total taxes paid or remitted by the 100 Group every year. There's a link here on the slide which you can look at yourself to see what PwC do. I'm not going to present that now, I'm going to move on. One important issue there is, well, how much of the total value created by these companies, remember they're the largest 100 companies in the UK, how much of the total value that they create is taken by the government? Again, maybe pause for a moment and think about what you think a reasonable answer to that might be. We're thinking here of value added. So value added is essentially sales minus the cost of goods sold. And it goes to four different places. It goes to the shareholders, it goes to the workers through wages, it goes to the government through taxes, and it also goes to the banks through interest costs and other financing costs. So what proportion do you think goes to the government? The answer, I think, is surprising. In 2019, the answer was nearly 48%. Roughly half of all the value created by these largest 100 companies is actually taken in tax by the UK government. Isn't that remarkable? Now, how did PwC to get to such a high number? And here's the answer. These are the taxes they look at and they ask the companies for information on. There are taxes on profit, corporation tax, petroleum revenue tax, betting and gaming duty. There are taxes on property like business rates and stamp duty. There are taxes on employment. In the UK we have national insurance, that's like a social security contribution, and it also includes income tax paid on income by employees. Taxes on consumption like VAT, customs duties and excise duties, and some taxes on the environment. So there are a large number of taxes which are remitted by businesses in the UK. So the other thing you can see from this chart, however, is that PwC divide these taxes into taxes borne and taxes collected. So that what they would like to say is, let's look at income tax under PAYE. That's a tax collected. So when I earn income paid to me by the University of Oxford, what I receive is my income net of the tax payment. The university has a responsibility for paying me my net income and paying the tax to the tax authority. PwC therefore treat that as being, oh well, the university is acting as an unpaid tax collector. That's really got nothing to do with that employer. And we could think of any business doing the same thing. Does that make sense? Let's look at that in more detail as to what PwC say. So taxes borne by a company are those that represent a cost to the company and are reflected in its financial results. So they're thinking of corporation tax, the employer's element of national insurance contributions, business rates. Taxes collected are those which are generated by a company's operations but are not a tax cost to the company. Income tax deducted under PAYE, that's pay as you earn, net VAT and so on. I repeat my question, does this distinction make any sense? Let's go back to the supply and demand analysis we've been doing and ask that question. If we think of in terms of effective incidence, we would expect both the supplier and the customer to bear some of that tax. These distinctions that PwC are making are really accounting distinctions. They're not economic distinctions. Let's go back and think about the effective incidence again and ask the question again, should business pay its fair share of tax? The effective incidence of tax has got to be on individuals. So we could take any of those taxes, corporation tax, PAYE, VAT. In every case, we could look at the market where that tax is relevant. We could look at supply and demand. We could figure out through the elasticity of supply and demand who is going to bear that tax, who's going to bear the effective incidence of that tax. And it's got to be some individuals, shareholders, customers, employees, suppliers. They're the people that are going to bear the tax. So when thinking about a fair tax, should business pay its fair share of tax? I'd say that doesn't make any sense. Don't ask me that question. I can't answer that. I could tell you whether I think a rich person should pay more tax than a poor person. I can make comparisons between people, but I can't make comparisons between people and businesses. It doesn't make any sense. So, do we agree with either of these two propositions? Business pays virtually all taxes? Well, actually, in an important sense, they do. Businesses remit virtually all taxes. In the UK, something like 85% of all tax payments are actually remitted by business. That's all those taxes on the slide that I've just showed you from PwC. They're actually remitted, so it's definitely true that business act as unpaid tax collectors, and it's very helpful for the government that that's the case. So my university, it pays taxes for all its employees. The employees don't have to do that. That's much easier, it's much easier for the tax authority to deal with. So businesses bear the formal instance of tax, and that's an important feature of the tax system. But businesses also pay no tax. Business ultimately cannot bear the effective instance of the tax because that can only be borne by people.